All right, and we are live. Wow, there's a lot going on right now in the market. So this week, 180 companies in the S&P will report earnings. Also, we had a wild April. So where will we be in May? I mean, this is what we need to take a look at. Also, notable earnings this week: Amazon, Apple, Meta, Microsoft. Today's Domino's Pizza reported earnings. We also have news from the Fed happening this week. Actually, next week, but we'll talk about this. And also, big news this week with the jobs report coming out. So there's a lot to talk about. Let's get started. With that said, welcome to Coffee with Marcus and Mark. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. Today is Monday, April 28th. And boy, Mark, what a month, what a week. I mean, wild times.
Yeah, these moves don't get much crazier. It's been quite a ride, and last week was a real nice week for the markets. I mean, we had a nice rally. The S&P finished higher by 4.6%. So, a real nice comeback after that volatility that we experienced towards the end of March, early April, when we had the tariff tantrum.
Yeah, for sure. Tantrum. And I mean, there were a few things happening if you zoom in a little bit. So these were all attributed to the tariffs, right? And then, okay, Trump said, let's put everything on pause for 90 days. So not last week, but the week before, again, moving lower. Why? Because still tensions with China, and Powell decided to attack Jerome Powell, the Fed chief, saying that he is Mr. Too Late, that he is a big loser, that he needs to be removed. And then last week on Monday, we heard, oh yeah, never mind. I'm okay with Powell, and we will keep him there, and he is probably doing a good job. And this is where everybody is right now. Okay, what's happening? However, as said, so last week, kind of a relief rally here, but the key question is, where do we go from here? We have these two zones. We have the zone between 5,500 and 5,800. We also have this zone here between what, around 4,800 and 5,500. So where do we go from here?
And I mean that's a tricky one because it does look like the markets want to move higher, right? When we had that initial panic because there was so much confusion, there was uncertainty. We didn't know what was going on with tariffs or just exactly how serious the White House was with those tariff increases and that escalation with China. It's not sustainable, right? It can't continue for much longer without really hurting things. But that's where investors, it seems as though they like this as a buying opportunity. Buy the dip. Maybe longer term, this won't be the big concern, but there's still a lot of uncertainty because we're getting mixed messages about the situation with China. It sounds like the U.S. is saying China wants to negotiate and they're ready to negotiate, and China says, who are we negotiating with?
China says there's no talks yet. So, and this is where, of course, the question is, what is happening here? So, let's talk about the five things that are moving the markets right now. Of course, tariffs are still front and center. However, this week also, we have a lot of earnings flying in. It is one of the busiest weeks for earnings, with 180 companies out of the S&P 500 reporting earnings.
Yeah, this could be one of the most important weeks of the year, to be honest. I mean, we have a big week for tech. We also have big companies, like you said at the beginning. There's 180 companies in the S&P 500 reporting just this week alone. We have Amazon, we have Apple, we have Meta, we have Microsoft. There's also Coca-Cola and Visa. And we're looking at what were the earnings, but also what the guidance will be. And that's where tariffs come in and have another role, because right now there's still a lot of uncertainty about expectations for the next quarter, but also what tariffs could do for guidance moving forward.
And I think honestly, this is where probably most companies will be very, very conservative in their guidance, or maybe even say we cannot provide any guidance. So we'll see. I mean, last week from our Magnificent Seven, we already had two reporting. We had Tesla reporting disappointing earnings. We had Google reporting better than expected earnings. This week, another four of the Magnificent Seven reporting earnings. So the only one left is then Nvidia. But as you said, Mark, we will hear from Visa and Mastercard. This will actually tell us more about what consumers are doing right now. We will also hear from oil companies on Friday. So we have a little bit of everything, and this is where we know it. Sometimes, if Microsoft or Meta sneezes or Amazon, the market can get a cold. I mean, this is where we are talking about the most valuable companies in the S&P or in the world right now. This is not only in the S&P 500. We see that Apple reporting, Microsoft reporting, Amazon reporting, Meta reporting, and we already have Tesla and Alphabet out of the way. But big week for earnings here that can move the market.
Absolutely. And I missed it if you already said it, but 73% of the companies that have already reported have beaten earnings, which is pretty good. But the average has been 77% in the past. And this is according to FactSet. So we're beating earnings, but not quite at the level that we have seen historically.
Yeah. So let's move on to number three. What is moving the markets this week? So this week, it is a big week for jobs. We have on Friday the big jobs report coming out for April. And I mean, this is where right now we will probably hear more. Okay, how are government workers impacted through the cuts that Doge did? How does this impact other industries? So it all starts tomorrow with the Jolts jobs opening at 10 o'clock Eastern Time, followed on Wednesday by the ADP non-farm employment. Thursday, we have the weekly unemployment claims, and then the big one on Friday will be the jobs report. So what's expected there, Mark?
Well, it's going to be interesting, and this is going to be a significant one in my opinion because, like you mentioned, the data is lagging, right? So now we're actually going to include some of what took place with those Doge cuts, right? Just like with the CPI data and PPI data that we had with the last report, those inflation numbers were coming down, but we know that it didn't include anything that was related to tariffs because it's lagging. So I think that this is significant. We see here that average or hourly earnings are expected to come in 0.3% higher. Non-farm employment numbers, a drop with the expectation of 129 versus what we saw before. The unemployment rate, though, is expected to stay the same.
Yeah. We'll see. All right, let's move on to factor number four influencing the markets today. And this is on Wednesday, the core PCE price index, the Fed's favorite inflation gauge, will be released on Wednesday. And I mean, we had recently great CPI consumer what is CPI? Throwing a blank right now. Consumer Price Index. There we go. And PPI. Great numbers from there. As we can see right now, inflation expected to only increase by 0.1% for April. And this will be a big one because we know that the Fed is in a tough spot. I mean, they have to make sure that inflation is still coming down, but with all of the tariffs talk, they also acknowledged, lots of Fed speakers, that this can slow down the economy. And we have heard it recently. Lots of talk about recession going on.
Yeah, we know that that is a big concern about uh, what's going to happen with the Fed and if they need to intervene with cuts, but also prices and profitability for companies. And we know that the initial shock with those drops is that the concern is those tariffs would really kill the economy and we would go into a recession. In recession probabilities jumped because of those extra prices and hurting profitability for companies. But we'll have to see. This is the Fed's favorite inflation gauge. I'm not 100% sure. I know it's released monthly. but I just don't know how much of this will include some of the movements that we've seen. I think we need to get the next core PCE price report to really have a gauge of what's going on tariff wise.
Yeah. All right, let's talk about factor number 5, influencing the markets and what's happening right now. And this is actually the week after we do have the next Fed meeting. And this week, we see no Fed speakers at all. They are in their blackout period. Fed members are not allowed to talk to the press or anybody anymore before the big meeting. And I mean, let's take a look of what is expected here next week. And so far, here's what we see, Mark.
Look at that. 9 days, 2 hours from now, we're going to get that Fed results, what they decide to do with monetary policy. And right now, it's expected that rates will stay the same. 93% probability. Interesting to see a 7% chance there will be a cut. I think that this is Fed funds traders being a little optimistic, which has been the case over the last couple of years. Fed funds futures have expected a little more from the Fed, and I think with the best hopes or intentions, and it hasn't been realized. So I don't think that there's any chance the Fed will cut.
Yeah, and if they do, it will be bad for the markets. If they cut, I mean, usually cutting interest rates should be good for the market. However, now a cut in May would send the wrong signal, basically saying the Fed is concerned about the economy slowing down and is cutting early, even though inflation might not yet come down. As you said, the core PCE this week. We need to have one more reading, and the Fed knows it. They know it that they need more data before they can make a decision here.
I absolutely agree. I think that this, if they cut, it would be a panic cut. It wouldn't be a strategic cut. Well, at least that would be the message to the markets. Because even, Fed Chair Jerome Powell said that he believes that tariffs are an issue, but that it's transitory. And if he goes into cutting mode, and or the Fed goes into cutting mode right away, I think that is actually sending the opposite message from what they've conveyed.
Yeah. So, I mean, looking at the VIX, the fear index, it has come down, but I do believe with all of this uncertainty that we have with these 5 factors, with tariffs, with earnings reports coming out, with the inflation reports coming out, with jobs report coming out, and with the Fed meeting next week, that we might see a flare up again above 30. So, therefore, I believe it is possible that the S&P going into May might remain in this area here, so that the S&P might have a rough time breaking significantly above the 5,500 level and rather pull back in there. What are your thoughts?
You know, I look at that chart and I absolutely agree, but I think that the market really wants to move higher. I think that we had some major concerns a few weeks ago, and I think we could pop higher. I really do.
All right. We shall see. We shall see. All right, let's talk about our positions and see what's happening here for us. So, WTF, last week, not a whole lot of new trades. Still one open trade here, BMY, Bristol Myers Squibb. And this is a trade that you are in. I decided to skip it. And today, moving up 1.5%.
Look at that.
So,
Look at
we'll
that.
see. I mean, no exit
Wait
signal
for an
just
edge.
yet.
Yep.
All right. Hopping over to our wheel trades, there is a lot of action going on our wheel trades. And first up, I mean, CSIQ. Boy, I mean, last week on Thursday and Friday, I mean, out of the blue, CSIQ rallying. If we look at this move from 7 to 1150, that is a 62% rally that we have seen last week. I mean, an enormous move higher. Today, it seems a little bit of profit taking, so down 12% right now. So the question is for CSIQ, where do we go from here? And again, this is where we had the level between 7 and 10. And right now, it seems that we want to push back into the level between 10 and 12. I mean, still for us, ways to go, but boy, I'm liking this move, especially with all the tariff talk going on. CSIQ, Chinese-based company, might actually, or with a big operation in China, should be affected by this. But wow, what a move! Loving this.
Oh, absolutely. I mean, this is what I expected, and I didn't see any true catalyst to explain this, but I just believe that with CSIQ, I mean, it's just been hammered, right? So at these lower prices, we found some support around $7, and it doesn't surprise me that we'll get these types of bursts out of the blue, some enthusiasm as it just starts to rocket higher, maybe some short covering contributing to that rally, right? Because if you're short, you've been making money on those shorts and it starts to take off, you have to buy back those shorts, which then accelerates buying. But also, no surprise that we're getting a pretty big pullback after such a huge rally over those last 2 days.
Yeah. So the question is, where will we be this week? So the next few days, definitely interesting. And we also, in 11 days, have the next earnings coming up May 8th. So we still have a few days, but earnings coming up, and we'll see what they have to say.
Yep.
HAL, Halliburton. I mean, interesting here. This 2 weeks ago made a push higher. Last week, moving a little bit lower. Right now, hanging out here right around the 21. If we are looking at this area that we have been in here between what is it, 19 and 23. We're dead smack in the middle, and we'll see. I mean, for me, it looks like that HAL is well positioned to move higher. Right now, doesn't want to do it today. Kind of down 0.3%, which is in line with the overall market right now.
Yeah, I of course I wanted a different earnings reaction, but right now it does look like we've stabilized here, and there just needs to be some more news to get this one going.
Yeah. IWM behaving nicely. I mean, this is where we have our cost basis at 199. My break even is at 194. And this morning, with IWM pushing higher the Russell 2000 index here, we were able to sell calls against half of our position at the 200 level expiring on Friday and collecting some premium here.
Yeah, I got a buck. You beat me on this one, but I like the opportunity to sell some calls, and that's what we've been waiting for. I'm comfortable with the cost basis of 200, and now I just want to get some premium to bring down the break even.
Yeah. So, and why did we only do it against half of our position? Well, because there's definitely some more room to the upside. I mean, again, IWM here very similar to what we see in the S&P 500. Also, in these two zones, about to break out, and this is where we said, okay, you know what? We play either side. If we break out, we will participate on the up move with half of our position. If we move back down, we're able to collect some premium, bringing down, as you said, our break even. And I mean, either way, wherever IWM decides to go from here, we are well positioned with this one.
That was a plan.
That was the plan. All right. Let's see. What else do we have going on? Coals right now have found some support at 6, trading in this range between 6 and 8 right now. So this is where they have been trading over the past few weeks. Dead smack in the middle right now with 7. So still has way to go up to about my break even, which is just shy of 14. Let's see what's happening here with these tariffs. And I mean, right now, Coles definitely impacted. Lots of goods, as you know, that you buy at Coles are being imported from China. So this is where right now there's more uncertainty, and there needs to be a trade deal with China coming up. I would say probably in the next 2 weeks. That's what I would expect, and then we'll see Coles moving again.
That'd be great for Coles.
All right, Merck. Oh my gosh, look at this. Merck up again today. So Merck, this is where I got assigned at 120. Decided to fly a rescue mission last week. I did it last Thursday. Sold some more puts in the hope of getting assigned so that I can bring down my cost basis. But what happened? Merck decided to rally. I was able to buy back these puts on the same day for 80% of max profits, collecting some more premium. My break even now, getting close to $9, $8.25 below my cost basis. And right now, also here, want to see, okay, what is the next range? that we establish or that Mark wants to move to, will it stay in this range? If so, I'm happy to sell some more puts at 76. If we move higher into the other range, I will sell puts somewhere around 80 to 82 for a rescue mission to bring my overall cost basis down and also continue to bring down my break even point.
Sounds good.
Finally, UPS, Mark, what do you think about this?
Well, it's not what I want to see with UPS, but with that initial drop that we had in April, it does look like we're seeing some short-term resistance right around 100. So we're sitting right around 98, but there have been these little pops towards 100 and then pullbacks. It looks like with some news we could break through 100 and move higher, but this is gonna need a little time. I still feel comfortable with my UPS position, and just looking for this to take off. Right now, it's pretty quiet.
Yeah. Well, tomorrow, no, actually, yeah, tomorrow,
Yeah.
before the market opens, UPS will report earnings and they will give us a better idea of how the tariffs are impacting UPS. And we see in the beginning of April, that's exactly when the tariffs will be announced. UPS, an international shipping giant, will, of course, be affected if there's a slowdown in trade activity around the world. And this is where they will probably let us know tomorrow morning what they think about it, what their outlook is, and how they are positioning themselves to weather this storm.
Which explains that move where it's quiet and consolidating, because now it's what is earnings, what will earnings be, and more importantly, how will traders react.
Yeah. Finally, one more trade that you're in. I'm not in this one, and this is Micron Technology. Talk about this.
I've just been having so much fun with MU. My cost basis is just around 74. So last week I sold 74 calls and I rolled them to this Friday. I got a buck 24. So annualized that was 60%. And then with that push higher, I was also able to sell calls at the 79 strike on half of my position. So I expect MU to have these pops and swings and to potentially get up to 80 or higher. And so I wanted to be able to capitalize on that first pop on half of the position. Right now, for Friday's expiration, I have 74s and 79 calls, and we'll see what happens if we pull back and I can roll those 74s again. It does look like, at least for the time being, I'm likely to get called away on half of my position, but this is really early in the week, so it's too early to say for certain. But it's been a fun one. A lot of premium collected, and I'll be looking forward to managing this more this week.
Fantastic. Yeah, for sure. I mean, this was a great trade. I am enough in enough positions right now, so this is why I decided not to take the trade, but great one. And yeah, you're having tons of fun with it. Lots of premium collection here. All right, one more thing before we take another look at the markets where we are right now. Look at this. I found this on Bloomberg.com. The presidential returns since for the first 100 days in office since 1933. And right now we are off to the worst start. Oops, let's go back there. To the worst start in the first 100 days since Nixon. Look at this. Going back to 1973, 1974.
Interesting. Yeah, that's not what a lot of people expected.
Yeah, right. I mean, this is where, I mean, Trump said, when I'm taking office, the economy will boom, the stock market will boom. Well, what exactly did he mean when he said boom? Right now, this boom looks more like an explosion, right? I mean, this is the boom that we
Good
have had so
point.
far.
Good point.
All right. So let's see where we are for today. So looking at today and a 5-minute chart of the S&P, we see right now trading at session lows. So this is not because of any news. It is just because of the uncertainty. What will happen here this week? The Dow is still hanging in there, slightly positive for the day. The Nasdaq already down 1%. and the VIX moving higher right now, up 4.6%. Still trading at 26 compared to the last few days. Or the last few weeks, still at lower levels here. But let's just see. Where do I need to click? Can't remember. There we go. Yeah, but moving higher here today, getting ready for a busy week of earnings.
Yeah. It will be a fun week.
It will be a fun week. Hey, hope that you enjoyed this market update where we tell you what the markets are focusing on right now, what to expect, and with that said, have a great rest of the day. If you enjoyed the video, give us a like. There's also a share button. Share it with anybody who might find this helpful, and then we'll see you again next week.
Dad jokes next week. Happy trading, everybody.